dive right into the deep end of the US-China trade decline, a topic that's been making waves in the global economic ocean. As we navigate through the tumultuous waters of international commerce, we find ourselves staring at the sinking ship of US-China trade. In November 2023, we witnessed a significant drop in trade between the two economic giants, with the combined value of goods traded plunging to $49.4 billion. That's a staggering 14% lower than the preceding month of October. This decline marks a cumulative loss of $111.5 billion since September 2022. The culprit? Trade restrictions on semiconductor chip exports, a move orchestrated by the Biden administration. This is not just a dip, but a plunge, signaling a turbulent tide in the global trade seas. But the ripples of this trade decline extend beyond the shores of the US and China. This isn't a localized issue, but a global one. The decline in trade, which has been ongoing since February 2023, has resulted in a cumulative global loss of over $155 billion. Yes, you heard that right, $155 billion. That's no small change we're talking about. It's a significant chunk of the world economy that has simply evaporated. However, it's not all doom and gloom. In an unexpected turn of events, November 2023 saw a narrowing of the US trade deficit. Imports of consumer goods fell to a one-year low. But why, you might ask? Well, it seems businesses are playing it smart. They're reducing their inventory accumulation in anticipation of slower demand. It's a classic case of caution and foresight, as companies attempt to navigate these uncertain economic waters. But here's the kicker. This trend, if it continues in December, could end up having no impact on economic growth for the fourth quarter. That's right. Despite the decline in trade and loss in billions, the economy might just hold steady. Now, this isn't a guarantee, but it's a possibility. A glimmer of hope in an otherwise gloomy economic forecast. But as always in the world of economics, it's a waiting game. The global trade landscape is shifting, and the world watches as it unfolds. With the US losing ground, other countries are stepping up to fill the void. Let's take a look at how the tectonic plates of global trade are shifting. China, the world's largest consumer of energy, has seen a shift in its imports of liquefied natural gas, or LNG. In the first half of 2022, China's imports of Russian LNG jumped by nearly 29%, totaling 2.35 million tons and valued at a hefty $2.16 billion. This significant increase has propelled Russia to become China's fourth largest LNG supplier, leapfrogging over Indonesia and the United States. This shift didn't occur in a vacuum. It's part of a larger picture that includes the decline of China's LNG imports from other nations. For instance, there was a drop of nearly 29% in imports from Australia, and a far more drastic reduction of over 76% from the US during the same period. What's behind these shifts in trade patterns? Well, one factor might be Europe's increased purchases of US LNG. As an alternative to Russian supplies, Europe turned to the US, especially due to the escalating conflict with Ukraine. This has likely contributed to the US losing its footing in the Chinese LNG market. Additionally, China's imports of pipeline gas from Russia have seen a record-breaking increase of over 63% in the first half of the year. Russia now ranks as the second largest provider of pipeline natural gas to China, only trailing behind Turkmenistan. These shifts, while dramatic, are a reflection of the fluid nature of global trade. As one door closes, others open. And as the US-China trade continues to sink, other countries are finding opportunities to step up and fill the void. With every decline comes an opportunity for growth elsewhere. The question is, who will seize it? The US-China trade decline isn't just a two-country tango. It's a dance that could send the global economy spinning. This economic dance floor is a complex web of interactions. And when one pair stumbles, others can too. The decline in trade between these two economic giants is no minor misstep. It's a stumble that's been felt around the globe, causing ripples of concern and uncertainty. Investors are watching the dance closely, their fears of a global recession growing with each dip in the trade figures. Wall Street banks, CEOs, and other financial observers are issuing warnings, bracing for potential steep losses in stocks and economic contraction. And it's not just the market players who are on edge. The Federal Reserve, the US Central Bank, is also watching the dance. The decline in US-China trade could force them to rethink their policy track, possibly leading to more restrictive measures, even amid signs of a looming recession. In the world of economics, every action has a reaction, and the US-China trade decline could set off a chain of events with worldwide consequences. This is just the tip of the economic iceberg. There's a world of knowledge out there waiting to be explored. Don't let these complex global trends pass you by. Arm yourself with information. Don't forget to hit that subscribe button to receive more insightful content on the global economy. Stay informed, stay ahead. Subscribe now to keep a finger on the pulse of the global economy.